I think the biggest risk in the market is that 50, 60+% of the volume is being executed by computer programs who have no idea what companies actually do. They're just reacting to data. And I think it's dangerous. I think it's why we have flash crashes in stocks. Last month, you had Amazon drop $40 in 4 seconds and come right back. The market value of Amazon did not change by billions of dollars in 4 seconds. The biggest stock exchanges are the New York Stock Exchange, NASDAQ, and BATS. What a lot of people don't know, though, is that the New York Stock Exchange actually owns and operates 3 exchanges. NASDAQ operates 3 exchanges, and BATS operates 4. The largest conflict in our market today is that exchanges pay brokers. They have to convince people to trade on their exchanges, and that the way that they're doing that is simply by paying brokers to send orders to them. If you look across the major exchanges, it's over $2.5 billion a year, and those conflicts harm the investors who those brokers are supposed to be representing. A lot of people look at the volumes in the market and scratch their heads. You can have a stock with 100 million shares outstanding, and on a single day it'll trade 30 million shares. And people say, how in the world is that possible? It's possible when you have 12 stock exchanges in the market. So there's a chance that a buyer is on NASDAQ Exchange 1 and a seller is on New York Exchange 2. And it makes it necessary for a high-frequency trading middleman to get in between these exchanges. If I have a pen and I sell it to you, and then you sell it to someone else, and they sell it to someone else, and it goes all the way around and it ends up back in my hands, have we created more pens? No. I mean, there are studies that say 97% of orders that are entered in the market are actually never executed. People are being paid to make it look like there are buyers and sellers in the market, when in reality, in times of distress, those buyers and sellers are rarely there. Exchanges are paying brokers to ignore the fact that the execution quality on these markets are not very good because of the advantages that are being sold to high-speed traders. Buying faster data is irrelevant unless I can trade with that data against someone who doesn't have it. So exchanges not only sell faster data and sell tiered data, they sell the ability to actually trade on that data against people who haven't gotten it yet. And that comes in the form of co-location, putting my server in the same data center as the exchange, buying a faster cable than somebody else, using microwave towers to beam my orders out when other people are using fiber optic cables in the ground. And this class system that the exchange has created makes a tremendous amount of money for the exchanges. They make more money selling tiers of data and technology than they actually do for matching buyers and sellers.